You think you're free? Think again. Behind every penny you earn, every home you're priced out of, and every policy that crushes your future, there is a name. An $11 trillion hydra with one mission: to own everything. This is BlackRock. A company so powerful, it bailed out the government during the 2008 crash it helped create, managed $500 billion in COVID relief, and now owns your neighborhood. But how? How what once was a Wall Street failure become the invisible hand that controls your rent, your retirement, and even the wars fought in your name? This is one of the most hostile takeovers of democracy, and once you learn about it, you can never go back. Every great villain has an origin story. This one begins with a $100 million mistake and a man who vowed to never lose control again. Meet Larry Fink, Wall Street's fallen prodigy. In 1986, at just 33, he was the golden boy of finance, celebrated for turbocharging a dangerous invention: mortgage-backed securities. Here's how it worked. Banks like Fink's First Boston bought thousands of home loans, chopped them into safe bonds, and sold them to investors. Think of it as a rigged casino. Banks pocketed fees while retirees and pension funds bet your home payments would never stop. But when interest rates exploded, homeowners defaulted. Fink's foolproof model collapsed. First Boston lost $100 million in 1 quarter. Fink was fired, disgraced. That failure haunted him. It taught him one truth: to survive, you must control risk, or better yet, control everyone else's. Enter Steve Schwarzman of the Blackstone Group, a Wall Street titan who saw opportunity in Fink's disgrace. He provided initial funding in 1988 for a new firm focused on risk management and fixed income asset management. This venture, initially known as Blackstone Financial Management, quickly gained traction, managing $2.7 billion by 1989. For years, the partnership held until two of the biggest egos of Wall Street collided. In a bitter split, Schwarzman sold his parts to PNC Bank for $240 million, a move he'd later call a heroic mistake, but it turned out to be one of the costliest. With BlackRock now his own, Fink built a weapon to erase his past: Aladdin, a system to predict chaos and profit from it. Today, BlackRock expanded its assets under management to over $11.5 trillion with a market valuation of more than $146 billion. To put it into perspective, it controls more money than Germany and Japan's economies combined. Let that sink in. It owns 7% of Apple, enough to sway boardroom decisions. It holds 6% or more of every major US bank, same banks that approve your mortgage. Your pension? Well, there is a 90% chance it's trapped in BlackRock's machine. But here's the twist. Every dollar BlackRock manages extracts a price you pay. Their $60 billion housing grab helped spike rents 40%. Their pharma stakes keep life-saving drugs unaffordable, and their risk models decide who gets laid off, who gets replaced by AI, and who gets to stay. Legends speak of a genie that grants wishes, but twists them into curses. Today that genie is real. It doesn't live in a lamp. It resides in 6,000 servers scattered across 20 countries around the world. And its name? Aladdin. BlackRock's $400 million a year oracle isn't a mere prediction tool. It bends the future to its will. Born in 1988 as a humble risk calculator, Aladdin, short for Asset, Liability, Debt, and Derivative Investment Network, has evolved into a formidable engine. It now crunches 200 million calculations every week, managing risk across 130,000 portfolios and monitoring over $25 trillion for more than 1,000 institutions. According to BlackRock's 2023 annual report, over 130,000 users rely on its insights. It devours real-time trades, economic indicators, and even unstructured data, from shipping logs and weather patterns to everyday news and even deleted tweets and TikTok dances. Nothing escapes its gaze. In late 2019, anomalies were spotted: shipping delays in Asia and factory slowdowns. Days later, as the world plunged into crisis and $2 trillion evaporated, BlackRock's clients exited early. How? That's, ladies and gentlemen, one of Aladdin's secrets. Fast forward to 2021. While Reddit traders declared war on Wall Street, Aladdin was tracking every post, every sentiment. At the exact moment retail traders celebrated their so-called victory over short-termist hedge funds, BlackRock sold its GameStop shares at their peak, $483 each, proving once again that you can't beat the genie. By 2022, Aladdin had learned a new trick: hijacking hype by partnering with Twitter, now X. This is BlackRock's business model. And here's the stark truth they'll never admit. Aladdin is rigged against you. If it bets on oil, gas prices climb. When it bets on your rent, your landlord hikes rates. So when it crashes the markets, you always foot the bill. And its ultimate coup, monopoly. With now over 1,000 banks, insurers, and governments dependent on Aladdin's insight, it's fair to say this software isn't only influencing roughly 1/3 of the global economy, it's also infiltrating governments. During the 2008 financial crisis, as Lehman Brothers burned, the US Treasury made a desperate call to Larry Fink. The man whose risky bets helped ignite the collapse was suddenly handed $130 billion in toxic assets to clean up the mess. No bidding, no oversight, just a blank check from taxpayers. Fink's fee? $120 million, with what could be considered as unchecked power. By 2020, the playbook repeated itself. As COVID-19 spread, the Federal Reserve granted BlackRock $500 billion to rescue, once again, corporate debt, including giants like Exxon, Chevron, and Boeing. But here's the bitter irony: BlackRock already owned significant stakes in those companies. They weren't saving the economy, they were profiting from it. A private firm was paid with your taxes to rescue assets it already controlled. While Main Street struggled, BlackRock's institutional clients and corporate partners cashed in. In 2021, Fink urged President Biden to fast-track COVID vaccines, while BlackRock held $400 billion in big pharma stocks. Coincidence? You be the judge. Today, former BlackRock executives occupy key roles at the Federal Reserve, the US Treasury, and the European Central Bank. And it doesn't end there. The DTCC, a cornerstone of global market infrastructure, recently expanded its board with influential figures from JP Morgan, UBS, New York Stock Exchange, and Goldman Sachs. This move exposes an open, almost casual relationship. In 2024, when the FDIC tried to rein in BlackRock's influence, Fink fought back, delaying oversight into the Trump administration with a dismissive, "We need more time," a clear message: we make the rules. For years, regulators warned that BlackRock's $27 trillion empire, combining its direct assets with its Aladdin platform, could collapse the global economy. Yet in 2016, Fink lobbied hard and won. No systematically important label. As the line between Wall Street and Washington blurs further, the true question emerges. In a system where the puppet master pulls the strings behind closed doors, is democracy still in our hands? You wake up every day believing you have choice. Coke or Pepsi, Google or Microsoft, United or Delta. Here's the cold truth. The game is rigged. Behind the veneer of a free market, BlackRock, together with Vanguard and State Street, the so-called Big Three, owns both sides of the board. They own every industry. A truly free market should be a level playing field where companies compete, innovate, and offer genuine alternatives. But what happens when a few giants hold stakes in both competitors? Picture a race where one team controls every lane. No matter how fast the others run, that team always wins. That's the stark reality today. According to a 2019 Harvard Business Review study, 88% of S&P 500 companies count BlackRock, Vanguard, or State Street as their largest shareholder. Together, the Big Three control 74.3% of the $7.2 trillion US equity ETF market. Is the market even free anymore? It's a subtle, almost unregulated form of monopoly, horizontal shareholding, where common ownership among competitors creates a web of influence. Take airlines. The same 7 investors control 60% of United, 28% of Delta, 27% of JetBlue, and 23% of Southwest. The result? An extra $4.6 billion in annual profits from higher fares and fewer routes, costs ultimately borne by you. Or take Big Pharma.
The pharmaceutical companies hiking the prices of drugs. Martin Shkreli is the former CEO of Turing Pharmaceutical, who's responsible for hiking the price of at least one drug by 5,000%.
Are you going to change the price?
No.
Martin Shkreli, c'est un épiphénomène.
Martin Shkreli is a phenomenon. He illustrates that the system is broken and that the drug ecosystem is completely money-driven.
Du médicament.
Richer and more powerful than ever, underpinned by its influence networks, the pharmaceutical industry stands unchallenged in its ability to dictate government health policies.
The industry's power is comparable to that of a state.
The pharmaceutical industry is so rich and so powerful. Its lobbying affects Congress greatly, and also the FDA.
You were wondering why your prescription cost doubled? Well, now you know why. This isn't just about inflated prices, it's about power. Between 1985 and 2015, as common ownership skyrocketed and wealth inequality exploded, the top 10% own 89% of stocks. So inflated corporate profits enriched the wealthy, while workers and consumers foot the bill. And the manipulation runs even deeper. These financial titans don't just influence products, they own the narrative and shape our very reality. They hold significant stakes in major media companies. 18% of Fox, 16% of CBS, 13% of Comcast, 12% of CNN and Disney, and up to 14% of Gannett, which reaches more than 250 daily newspapers, including USA Today. They control your investments, the information you receive, and then offer you an illusion of choice. In many US markets, institutional investors with endless cash are snapping up single-family homes with all-cash offers, leaving ordinary buyers like you and I in the dust. As these moves drive home prices to record high, millions of millennials and Gen Z find themselves trapped in a cycle of perpetual renting. And then there's the chilling slogan, "You will own nothing and be happy." Originally a provocative tagline from the 2016 World Economic Forum 2030 predictions discussing the future of subscription services and access-based models, this phrase has morphed into a grim forecast. Videos of the predictions still circulate online, even though the official WEF website has since removed it, and Reuters has dismissed such claims as fake news. Regardless, the sentiment resonates. More and more sectors shift to subscription-based models, and true ownership fades, replaced by perpetual fees and renewals. Consider this. In 2021, reports show that institutional investors acquired roughly 1 in every 7 homes in key US markets, driving rents up by as much as 40%. While these corporate landlords reap enormous profits, your bank deposits, pension funds, and 401ks are funneled into BlackRock's ETFs, quietly fueling a system that makes living costs soar. Adding insult to injury, one of BlackRock's top executives had dismissed the financial struggles of millennials and Gen Z as mere entitlement. An audacious remark that underscores the disconnect between those profiting from this model and the reality you face every day. BlackRock insists it isn't buying homes per se. Technically, they're right, but they wield significant influence through their stakes and voting rights in companies that dominate the single-family rental market. They play on semantics, but the end result is the same. And it's not just homes. BlackRock's tentacles grip student housing too. Through major operators like Greystar and MAA, it controls over 1 million rental units near campuses. Graduates burdened with debt become perfect tenants. Desperate, transient, and easy to exploit. And you know what the cherry on the cake is? Larry Fink dismisses America's retirement age of 65 as crazy, a relic he claims dating back to the Ottoman era. In his 2024 open letter, he suggests that with Americans living longer, the solution is to simply work longer. While he tells you to extend your career, BlackRock's $12 trillion portfolio profits from every extra year you spend at work. And your 401k isn't really yours, it's trapped in their machine. As Fink bluntly puts it, give us your money and we'll decide what to do with it. The goal is clearly to keep you chained to a system where your future is nothing more than a perpetual fee. BlackRock's reach isn't limited to borders. Its investment strategy can literally decide which countries thrive and which collapse. By injecting billions into emerging markets or pulling out of distressed economies, BlackRock influences everything from infrastructure development to political stability. Its stakes in US Treasury bonds and European government debt mean that its decisions echo in the halls of power around the world. Furthermore, BlackRock holds a significant shares in major defense contractors. It owns $18 billion in Lockheed Martin, the Pentagon's top contractor, $12 billion in Raytheon, and $9 billion in Northrop Grumman. As conflicts rage around the globe, these investments mean that BlackRock profits even when human lives are at stake. It's relevant then to ask, is there a financial incentive for war rather than peace? On November 9th of 2023, activists marched to BlackRock's headquarters in New York, demanding to end its investments in companies arming the Israeli war machine. BlackRock's response then was silence, and a 27% surge in defense stock profits. Its CEO has even expressed support for aggressive US military posturing in volatile regions, calling recent deployments a spectacular statement by the United States. It even has its hands in shaping international alliances. Recent investigations reveal that BlackRock, along with its peers, has formed strategic partnerships with state-controlled banks in China, channeling capital into sectors deemed vital by Beijing. It's funding China's rise while lobbying the US to ease trade sanctions. Their strategy is to profit from both sides of every conflict. Despite commanding trillions of dollars, The average person knows almost nothing about BlackRock. The face we see, Larry Fink, is only part of the story. Behind him lies a tangled web of ownership, where Vanguard and State Street not only stand as BlackRock's major shareholders, but are also interlocked with each other. This isn't just about profits, it's an ethical quagmire. How can a private firm control more wealth than most countries, and then advise governments on policy, all while dodging accountability? And even when caught, the consequences are a joke. In 2022, the SEC fined BlackRock $12 million for hiding how it boosted fees for a client. To put it into perspective, that's 0.0001% of its assets, a speeding ticket for a financial Ferrari. And now consider the evolution of BlackRock's public persona. Once a vocal advocate for diversity, equity, and inclusion, BlackRock's narrative has shifted dramatically. Its latest reports have quietly erased this language. It has long been pushing the progressive branding, yet when political pressures mounted during the Trump era, BlackRock reframed its mission to align with what the market and its powerful partners demand. BlackRock doesn't care. It isn't left or right. It's strictly money. As we near the end of our journey, one haunting question lingers. Can we ever challenge BlackRock? This empire is so vast, it controls your savings, your home, and even the course of whole nations. As long as power remains in the hands of a few, the average person will always bear the cost. BlackRock's biggest trick yet is to make you believe it's too big to fail. But the change starts with us, with understanding every influence that shapes our lives. This is the journey I'm committed to on this channel, shedding light on hidden powers and challenging the status quo, one revelation at a time. If you want to join the conversation, please subscribe, share your thoughts, and comment below with your ideas and solutions. Until next time, stay curious, stay informed, and never stop questioning the world around you.